in relation to the evolution you have seen is definitely different across the regions. And I think here in APAC, there's reasons, there's overriding reasons across the board. And I think regulatory is kind of one of those in relation to kind of a driving kind of agenda from some of the regulators. I think the, facilitation of actually the e-commerce is another kind of driving agenda in terms of the reason behind kind of the evolution. And I think also, provision of the ability for the unbanked population to also be supported is another kind of driving force. And I think there's also then, I think there's an element of that kind of regional kind of dominance or regional control of your kind of own destiny within some of the regions, within some of the countries as well, in terms of what's happening, whether it's kind of instant payments versus cards, etc. So I think all of these kind of reasons are driving an agenda. And I think here in APAC, we've definitely seen, the regulatory kind of central bank push coming from the likes of China, where, ultimately they're really driving an agenda. And, they have a population of, over 1.4 billion people. So from a retail use case perspective, it's an obvious thing to do. I think the same with India, and I think the regulator RBI behind that agenda around also facilitating financial inclusion for unbanked population of India, I think has also driven that agenda. You can see the pace of change from when I was in India before COVID and then now, and like instant payments is used everywhere, embedded fully into kind of the ecosystem of people's day-to-day lives. So from that kind of retail commerce side of things, you're really seeing that kind of agenda being pushed. And I think that, that digital agenda, I think APAC has been pushing for some time. There is obviously all the other kind of locations, Indonesia would be iFast, Malaysia's been pushing with RPP, Australia with MPP, they're all, driving that kind of digital inclusion agenda, some backed and some not by regulators. And I think that's where you see some of the differences and some of the pace as well. So when you see a regulator and a central bank behind it, the pace of change definitely seems to increase. There is different reasons to do, and the benefits of doing it. And like I kind of break them down into things like, they get simplified into say cost, speed, security, transparency, reach and stuff like that. But I think, cost will also always be the top, kind of agenda point. And we always say, you shouldn't discuss things based on price only. Yeah. So I think that's where the cost element has kind of gone. The cost point, ultimately it needs to be from a fee perspective, a small cost point eventually. Yeah. Because expectation is you go move into an instant payments kind of agenda. The tickets are smaller. There's more of them. So therefore, their cost point gets smaller also. But for me, what I'm seeing is a kind of a bigger shift now. And I think that's also the market is seeing it because we've kind of opened up. And as I mentioned, Singapore has a million threshold now. We've opened up, I think, these schemas and we've opened up these rails. And you can see that the cost point now is being kind of challenged by the security. Yeah. So in the UK, the stats are there that 6 times more fraud related to instant payments. Yeah. So obviously our corporate clients, fraud, anti-money laundering, all of those requirements in relation to making sure that their payments are secure and there isn't any risks in that kind of movement of money, especially when you're moving it globally. I think that's a big kind of agenda now that we're really seeing. We need to solve for that within this ecosystem. And you do see that now coming into play from the market pushing things like, and even the SEPA regulations have a real proof of confirmation in there, which ultimately means you have to validate the beneficiary and do a pre-check on the Benny accounts, and also the pushback to the banks to take total ownership of that kind of screening side of things in terms of sanctions and filtering from an AML monitoring perspective. So I think that agenda is now moved a little bit out of the cost and into the security side of things.